2. Plastics is a manufacturer of a wide range of plastic products. The annual financial statements of Plastics Limited for the year ended 30 September 2018 will be presented to the Board of Directors for authorization on the 25th of October 2018. So we've got year end 30 September 18, authorization 25 October 18. You guys will see as we've done questions, I've always drawn a timeline. I do recommend timelines. I get confused without them, so do recommend. Oh, no, man. Okay. There we go. Sorry, guys. I don't know why it does this, but it does do it. Still. Woman. 30 September. No. October. Okay, there we go. My timeline. Right, so we said 30 September, 25 October. You are presented with the following additional information. The following sales transactions have not been recorded in the accounting records of Plastics Limited for the year ended 30 September 2018. So they have not yet been recorded, and we have been asked to do journal entries for information point 1. Right, so on the 1st of September 2018, we sold 200 branded plastic water bottles in exchange for a coffee machine. For the staff canteen, the fair value of the coffee machine amounted to 20,000. The selling price and cost price of the branded plastic bottles amounted to 99 Rand each and 75 Rand each. So that's the cost and the selling price, respectively. On the 1st of October 2018, the coffee machine was available for use as intended and brought into use by management. So, in other words, what's happening here is we are receiving a coffee machine and giving away the branded plastic bottles, or selling them in that case. Again, the first concept of revenue is we account for the amount that we are entitled to receive. What are we entitled to receive? A coffee machine worth 20,000. So the amount of revenue that I will recognize is 20,000. Debit, property, plant, and equipment, because I'm receiving a coffee machine. Credit, revenue. Comfortable. They didn't ask me for the cost of sales leg. If they did, debit cost of sales, credit, inventory with the cost of those plastic bottles. So 200 times 75, 750, 7,540, 15,000 would have been the cost of sales. Okay, so 75,000, no, 75 times 200. Calculation over there. Everybody happy with that? Right, so 1.1 done. They also asked me for, okay, that's nothing to do with that. Am I too high? Okay. Then in terms of 1.2, on the 1st of April 2018, Plastics entered into a contract to with PH1 to sell cell phone covers to them for 88 Rand each. If PH1 purchases more than 10,000 cell phone covers during the year ended 31st of March 2019, the price per cell phone cover will be reduced to 75 Rand each. For the period from the 1st of April to the 30th of June 2018, so my first quarter basically, am I right? When's my year end again? 28 September. Right, so 1st of April to 30 June. So that's that period. My first day of my financial year was 1st of October. Alright, so I didn't sell to them there, but for the first period, I sold to them how much? 300 cell phone covers. Then from the period 1st of July to 30th of September, so that's then my year end, we sold an additional 5,000 plastic covers on credit, and they will settle the PH1 will settle the outstanding balance due to plastics on the 31st of March 2019. Based on past sales history, the sales manager of plastics estimated on the 30th of September 2018, our year end, that the sale of cell phone covers will exceed 10,000 units. If it exceeds 10,000 units, they are entitled to a discount. Right, so then we'll be selling those cell phones covers at 75 Rand instead of 88. So the amount we're entitled to receive is 5,000 covers plus 300 covers times 75 Rand. That's what we're entitled to. Agreed? So we have a debtor, trade receivables. They owe us 5,300 cell phone covers times 88 Rand a cover. We only expect to receive 75 Rand because of the discount we're giving them, credit revenue with 5,300 times 75, and then raise a provision for a refund of 68,900. And that's the difference between the 88 and the 75. You guys happy with that? Sorry? Yes, a provision for discount. It's not a discount. Oh, sorry, yes. Discount. Right, and then there is a provision for discount of 68,900 that will affect my deferred tax. Right, so in terms of my deferred tax that they asked me to calculate, can you see that? No, you can't. Can you see that? Yes, you can. Provision for refund, 68,900, carrying amount 68,900 minus future tax deductions. I will get that deduction only when that refund or that provision, again it's not refund, it's discount, is paid. So in future I'll get that deduction. Tax base 0. Everybody happy there? That gives me a deductible temporary difference, because in future I'll have a deduction where I won't have a income, and that leads me to an asset. Is everybody happy there? Good. 1.2 done. On the 25th of September 2018, Plastic sold 1,000 plastic chairs to Frontline Limited, 450,000 cash. Frontline immediately took title and accepted billing for the 1,000 plastic chairs sold, but requested Plastic to postpone the delivery until the 10th of October due to the lack of storage space at their premises. Plastic stored the 10,000 plastic chairs separately in their warehouse, ready for delivery and clearly marked as sold. Right, so this is what they were referring to when they asked that theory question, right? So remembering this theory question, bill and hold arrangement. Okay, you've got most of it over there, right? Let's just move it down a little bit. Okay, the bill and hold arrangement must be substantive. In other words, the customer requested it. That's met, right? Because they requested us. Secondly, it's identified separately as belonging to the customer. It's standing in the corner and it says sold, right? The product must be ready for physical transfer. It's ready. They've already said, yes, we accept it. These things look ready. Happy with that one. Point number 3 met. Then point number 4, the entity does not have the ability to use or sell to another customer because it already says sold. Okay, so all 4 are met. Are we allowed to recognize revenue then? Yes. Right. So, in terms of that, I'm going to move that back here. In terms of that, we debit our bank because we've received the money of 150,000 and we can credit revenue of 150. Happy? Okay, that concludes point 1, for which we should do the journal entries. Point 2, on the 15th of September, see what they require. Point 2, motivate with reasons. Okay, I'm going to read that. I'm not going to motivate with reasons. On the 15th of September 2018, an oil tank truck of Plastics Limited was damaged in an accident. The oil tank truck was used to transport oil to the factory where it is used in the manufacturing process of plastics. This damage to the oil tank truck resulted in oil spillage on the tar roads and the surrounding area over a 15-kilometer radius. The oil spill caused considerable environmental damage, resulting in a public outcry to clean and restore the environment. Subsequently, so this happened on the 15th of September, that's within my financial year. Subsequently, the directors of Plastic announced on the 25th of September, which is still within my financial year, of the company's intention and commitment to clean and restore the entire area affected by the oil spill. The cost to restore the damage is estimated to be 2 million, and the restoration work will commence on the 5th of October, so after year end. At year end, on the 30th of September, the directors of Plastics are unsure if a provision for environmental costs should be raised for the costs to be incurred in the restoration of the environmental damage. Right, I am actually going to discuss this one because I don't know if I'm happy with the memo. Let's just make sure what they asked us. They asked us, motivate with reasons whether the provision for environmental costs should be accounted for. Right, this is C, right? Motivate with reasons. Okay, so we look at the definition. There should be a present obligation. In this case, a present obligation exists as the MD has made a public announcement promising to restore the damage. Right, that is also our past event, the oil spillage and the announcement. So we do have an obligation because we told the people we will fix it. So it is a constructive obligation. They have an expectation. It will lead to outflow of economic benefits. The company will have to pay to have the environment restored. In other words, yes, yes, and yes, I do have a liability. Provision is a liability of uncertain timing or amount. Right, they estimated that it would cost 2 million. Right, I would say that that is a fair estimate. So I think in terms of this, maybe just scratch that and then say there should be a reliable estimate. And we are happy that that is equal to 2 million. Then we can also say that it is probable. We've already announced it and it will happen, and we gave a date being 5th of October. Right, so do you agree with me that yes, a provision should be raised at year end? Is everybody happy with that? Provision to the value of 2 million. Is there anyone who disagrees with me? Okay. That means, for some reason, I disagreed with me when I set up this memo. Provision for the damage. Oh, no, I didn't. Okay. Provision for damage, 2 million. Again, my tax base is 0 based on what we discussed previously. Carrying amount, the tax deduction will only be received when it is paid. Right, so is everybody happy with this? Okay. That's that. Then moving on to 3. On the 1st of October 2017, the carrying amount and the tax base of manufacturing equipment acquired on the 1st of October 2014, so 3 years previous, amounted to 480 and 240 respectively. Depreciation and tax allowance on the manufacturing equipment for the current year both amounted to 240,000. Plastic depreciates manufacturing equipment at 20% per annum according to the straight line method. So just to put this in IFRS and SARS terms, we have an opening balance of 480 slash carrying amount and 240. For SARS, tax allowance was 240. So at year end, my tax base would be 0. Everybody happy with that? IFRS 240. So at year end would be 240. Carrying amount and tax base. Plastics depreciates equipment at 20% per annum straight line method. So we can work back and get the cost of this equipment. Let's see if we need the cost. SARS allows 12% tax allowance on manufacturing equipment in terms of the income tax, 40% first year, 20% thereafter, and that is not apportioned. Okay, on the 30th of September 2018, that is my financial year end. Everybody happy with that? So, on that year end, we said those are our balances. The directors of plastics re-estimated the useful life of the manufacturing equipment and determined that the useful life on acquisition date of the manufacturing equipment is actually 8 years due to the implementation of a new improved maintenance plan. The residual value remained unchanged at 0 during the current year. Okay, that's all we need to know for now. So basically, going back, we said we depreciated it at 20%, which is over 5 years, agreed. Now we're saying it should be over 8 years. Do you agree with me that there's only 1 year left of the first 5 years? Does that make sense? Okay, everybody's happy with that. Let's go to my timeline. I didn't draw a proper one. Okay. In terms of timeline, year end is 30 September 18, 1st of October 17, beginning of the year we've got 16, 15, 14. That's where I bought the asset, am I right? 1st of October 14, bought, so that's 1, 2, 3, 4 years by the end of the year would have passed. So in other words, there's 1 year left over here. If we look at the new estimate, it would have been 8 years, of which 4 have passed, meaning 4 years are now left. So the carrying amount, we now need to take it back to 1st of October. There would be 5 years left at the beginning of the financial year, agreed? So I need to take the carrying amount at the beginning of the year divided by the remaining useful life of 5 years to get the new depreciation. Old depreciation was 240. Happy with that. They gave that to me in the question. New depreciation, they gave me the carrying amount, 480 divided by 5. How much? New is 96,000. So there is a change of sorry, my calc, 144,000, and I think that they have asked me to disclose this. Yes, number 3 needs to be disclosed. The disclosure note that I need to do is then a profit before tax note. Right, so notes to the financial statements. I've got my profit before tax note, and I'm looking at my depreciation. What I omitted here is I want comparative figures for 2018 and for 2017. 2017 would have been 240,000. Let's just quickly get back to that. Want to see if we missed something here. Right, going on in this paragraph, During the year ended 30 September, the accountant of plastics discovered that the manufacturing equipment with a cost price of 500,000, which was originally acquired on the 1st of October 2016, was incorrectly recorded as operating expenses. Timeline: 1st of October 2016, so that's over here, definitely within my previous financial year. Incorrectly recorded as operating expenses. SARS indicated that they will not reopen, and they will allow everything as a deduction in 2017. The above-mentioned re-estimation of the useful life of machinery, as well as the incorrect allocation of manufacturing equipment as other operating expenditure, has not been recorded in the accounting records yet. Right, so before we continue with that note we were busy with, let's quickly look at what happened over here. What they did is they debited, there we go, they debited as expenses. Expenses, 500,000, credited blank. We say that is wrong. We want to correct that. To correct that, we'll debit. We're happy with bank. That actually happened. Debit PPE where it should be. Credit expenses 500. Happy with that. Right. Then that should have been depreciated for that year as well as for my current financial year. I'm going to have a negative expense. See, it was in... Okay, so we debited expenses with 500,000. Yes, and I'm doing this correction also in the prior year. Yes, prior period error. Right, so the 500,000, then I need to account for the depreciation of that year. Debit, depreciation, credit, accumulated depreciation. Same thing in 2018, debit, depreciation, credit, accumulated depreciation. And manufacturing equipment, is that what we dealt with above as well? And that will have a useful life of 8 years then. Right, so the 500,000 divided by 8 for the first year. Is everybody with me? Does that make sense? How much? 62. So I have to increase depreciation with 62, 500. And also for the current year, 62, 500. So in terms of putting the error, let's do the error first. Putting that error in a note. That note looks very similar to our changes in accounting policy. So firstly, again, what I omitted here is the description. What happened? And yeah, that's basically all you want to tell them is what happened. Right, so there was a decrease in expenses of 50,000, which would lead to an increase in profit. That's why it's positive. There was an increase in depreciation of, why am I saying 100,000? That should be 82,600. Was it 62,500? Okay. Sorry, please change that. 62,500. Then my income tax expense would be, let's quickly get that. So that's 500,000 minus 62,500 times 28%, 122,500. Then that gives me, that's also a negative. Profit 315. Same thing over here. Increase in PPE, increase in accumulated depreciation, 62,500. Increase in deferred tax because they didn't open previous year's tax assessments, 122,500. Is everybody happy with that? 315. Right, then looking at my depreciation expense. Okay, are you guys happy with the prior period error note? Yes. Okay, sorry. I hear you. The first year they haven't changed it yet. Okay, right. So, in this year, my machinery still would have had a useful life of 5 years, agreed? It only changed here. Let's use a orange pen. Ah, okay. Okay. Right, so on this date, when I purchased my machinery, I had a 5-year useful life. In other words, depreciation would have been the 100,000 for last year. Is everybody with me? Okay, so my apologies. This was correct. Prior period, my depreciation was 100,000. Yes. Yes, but remember, useful life estimations are done prospectively, not retrospectively. I know it gets confusing. Right, so then at year end, or at the beginning of my year, my carrying amount was 400,000. My remaining useful life was 7 years. Agreed, because 1 year has passed. So that means depreciation for the period going forward is 57,143. So that's my current year, 57,143, 57,143. Right. And that would have been corrected in my current year. That's why this is only for 2017. Okay. Then, after this, backing up to my note, for 2018, what I said is I've got that depreciation of 57,142 plus, and then this 240 would be 340. So that's the 240 plus the 100,000. That's the 175,000. Sorry? Again. 175,000 plus what we calculated the other depreciation to be as 96. Plus current year 96,000. That should give you the 153,143. Right, and then you describe to them that during the current financial year, directors decided to change the estimated useful life of machinery to better represent the utilization thereof. This is due to the improved maintenance plan implemented. Depreciation expense decreased by 186,857, and that is the difference between this amount from last year and this amount from current year. In the current year, due to the change and the expected future increase in depreciation is 186,857. Okay, so everybody happy with that note then? 186, that's the difference between what it would have been, 340, and after the change has been implemented. Okay, great. Right then, on the 1st of September 2018, Plastic cancelled the cleaning service arrangement with Bright Limited to clean the factory and instituted a claim of 60,000 against Bright for using environmentally hazardous cleaning chemicals after several employees contracted lung infections. Court case is scheduled for 15 November 2018, which is after financial year. According to the legal advisors, there is sufficient evidence against Bright that the allegations are true. So it's probable but not virtually certain. We have a contingent asset, so we need to disclose that. In terms of what the disclosure looks like, right, contingent asset. Firstly, describe what happened. We instituted a claim against who? Bright for what? Using environmentally damaging chemicals. Legal advisors of the of the opinion that the claim will succeed, probable. And then date. Ah, sorry. I don't have the date in here. Okay, so amount needs to be, and then just add the date, which was 15 November. 18 is the date that the case will be settled. Right, everybody happy with that? 10, on the 10th of October 2018, plastics inventory was stolen after the delivery truck transporting it from the warehouse was involved in the accident. Cost price of the inventory that was looted from the truck amounted to 220,000, of which 50,000 related to inventory that was on hand on 30 September 2018. The company's insurance policy does not cover contingency claim, and the claim was repudiated by the insurance company. You can see that this happened on the 10th of October, so that's after my financial year. When was the truck in a crash? Was that within the financial year? It was. Was it after the financial year? No, that was the date. The inventory was stolen from... Oh, okay. 10 October. So this is a non-adjusting event. So just a disclosure is required. Event after reporting period. The date that it happened. What happened. Okay, so this isn't the same accident as before. Okay, I thought it was the same. Delivery truck was in an accident. Inventory to the value of that was stolen. 50,000 was included in the balance. 28 September. Plastic is not covered for the damage, and the insurance company has refused to pay the claim. Right, so just a disclosure basically of what happened. Letting my shareholders know, listen, this happened after year end. It doesn't affect my current year, but it will affect business going forward. Everybody happy there? On the 1st of September, an employee of Plastics instituted a claim against Plastics, 450,000. Injury sustained whilst operating a machine used to recycle plastic products at year end, 30 September. So this did happen within my year end. The legal advisors of Plastics are of the opinion that it is not probable Plastics will be found liable. The employee did not wear the prescribed hand protection gloves supplied by Plastic while operating the machine. Court case is scheduled for 15 November. So 15 November is a big date for these guys. Again, contingent liability. We describe what happened. The employee got hurt, blah, blah, blah. Amount. Is it probable? And date. Again, I left out the date, 15 November 18 is the date that this claim will be settled. Right, is everybody happy with that? Then, for note number 7, they wanted us to do the disclosure. On the 25th of September, the Board of Directors of Plastics declared a dividend payable to the following registered shareholders of for the financial year ended 30 September 2018. So this dividend was declared within my financial year. In other words, I have a liability at year end. Right, Classics Limited. That is a company, and we will not have withholding tax. Then, Professor Tim or whoever, there will be withholding tax of 20% if that is my tax rate, yes. On Han Walt, again, individual, so 20%. Toy Limited, again, a company for which we do not withhold withholding tax. Then it says dividends as well as the dividend tax were paid on the 10th of October. The dividend transaction has not been recorded yet in the draft financial statements. So let's quickly look at the tax effect. So 75,000 times 20% is 15,000, and 30 times 20% is 6,000. So the tax that I need to withhold is 21,000. Right. In other words, I need to raise a liability, and that's going to be paid out of my deferred taxes. Ugh, man, what am I saying? Retained earnings. I debit retained earnings with the full amount of 420,000. Credit SARS, I owe them 21,000. Credit dividend declared, I owe my shareholders 399. Everybody happy with that? Great. And then when it is paid, they didn't ask me for this journal entry, but as per explanation, we'll actually have the 420 over there, and then we'll debit our dividend declared. Right, and that is it for this question. Any questions? Cool. Guys, I hope tonight was